All right. Part two. So far I didn't link my TC2000 layout yet. I'm gonna do that. I'm gonna link it to like every single one of these videos. But for now, it's not gonna be there. So if it's not there, don't worry. It's just not there. Uh, yeah. So this is gonna be part two, which is entry, managing risk, stop losses, taking profits, and I'll go over this risk calculator a little bit. So basically, you guys know the setup. The setup is, big move up, stock goes sideways. As it goes sideways, the volume is dying out, and then it's building these higher lows and it's holding the moving averages. So, yeah, just looks good. But on breakout day, you're going to see this, once this opens, you're looking at the 5 minute chart. So, I got the 5 minute chart here on the right. We're looking at the first 5 minute candle here on breakout day. Now, you'll see that this 5 minute chart doesn't really look that good. Like, it's pretty thin. If you were to be day trading this, that wouldn't really work. But that doesn't matter because we're not day trading it. It has just enough volume. Typically, I like to see a little bit more volume than this. You can see it's kind of thin. This is what a thin stock looks like versus, let's say, SPY. You can see, the volume's really clean. Price movement's really clean. But this one works. It's a smaller cap, 563 mil market cap, 7% ADR. So fast mover. Decent candidate here. The first 5 minutes. So you're going to see this breakout. And this is what you see in the first 5 minutes right here on the right. You'll see that the volume comes in right away. So people always say, like, how do you know it's going to be a big volume day? Well, I can tell right away that the first 5 minute candle has huge volume relative to the other days. So down here, if you look at that, it's like, the volume's pretty low, pretty low. It comes in a little bit in the mornings on most stocks, but on the morning of breakout day, it's going to be huge. Like, you can see this looked like a pretty big volume candle right there, compared to the rest, but then this one just makes it look little. So the volume was just huge on the first 5 minutes. And after that, so you wait 5 minutes, right? Next 5 minute candle comes in. So no matter if the first 5 minute candle closes green or red, that's where you're going to base your entry off. So you have to wait for the first 5 minutes, pretty much every single time. You could do it on the 1 minute, but your success rate's not going to be as good. So I would just say wait for the 5 minute. And what you want to see here is when the first 5 minute candle highs are taken out. This is when you're buying it. So right here, this candle comes through, takes out the highs, you buy it, and your stop loss goes at the low of day. So on this risk calculator, what you'll see down here in the bottom right corner, hopefully you can see that, it'll tell me right here, stop loss low of day, and then it'll tell me the value, whatever the low of day is. It'll say how many shares to buy to risk 1%, and then the dollar amount of that position. So if you just right click on shares to buy 1% risk, you get this little menu. Mine's set at $1,000. So if I want to risk 1,000, 2,000, 3,000, whatever, I can just multiply that. So it's like, if it's telling me to buy 3,700 shares and I want to risk 2,000, then I'll buy 2 times 3,700 shares. Not 37,000 shares. Is that what I said? I don't know. Anyways, yeah, so you would just put your risk here. If you have a 100K account, it's 1,000. If you have a 10K account, it's 100. Pretty simple. Just put 1% of your account, put that as the first value, press OK, and it'll update. And then you change the dollar amount, you do the same thing. So right here where it says 1,000, you just change that to your 1% of your account, and it'll tell you right there. And then we have this ATR check, so this little green dot. What you don't want to see, so this is like really, really close. The ADR on this is 7.7%. You don't want to see it up more than 7.7% before you buy it. So if it's up, like right here, if you're buying the top of this candle, 8.6%, chances are you're too late. Like, you should be getting tighter stops than that. You don't want your stop to be further than in the average daily range. I mean, does it matter all that much? Not really. You're just going to get less size. Either way, you're going to risk 1%. The best ones you'll be in, like, let's say you get in like this, like the first 5 minute candle is only 1-2% higher. Then you get in, that'd be perfect. That'd be more ideal. Although this one was, near ADR, I did take it. Even if it's above ADR, I'll take it sometimes. But general rule, just try to avoid that. Try to get in earlier. If it's up, a lot more, like you're buying it way up here, that's probably not a good idea. But yeah, so you buy here when the first 5-minute candle's taken out. Set your stop loss at low a day. If it comes down and takes out your stop, it is what it is. You got stopped out. But then if it goes back up and takes out the highs of the day, you re-enter and then just leave it at that. If it stops you out again, don't try to trade it again. Just 2 tries. That's it, basically. So let's see. Now you know where to buy it. Oh, the formula. So if you don't have this risk calculator, you need to figure out how many shares that you're buying. So the formula for that is going to be, how do I make this bigger? 64. Can you see that? Okay, so the formula for this is going to be risk divided by entry minus stop. All right, so risk divided by entry minus stop. Your entry here is 5-minute highs. So let's say you're buying it at $5. Then you change this to 5. And your stop here is 4.62. 4.62. And you have a $10,000 account, so you're risking $100. Now you go to your phone, open up the calculator app. Hopefully, we all have a calculator app on our phone or some sort of calculator nearby. So you do 5 minus 4.62 equals 0.38. So now you do 100 divided by 0.38. And that tells you 263.15. So you're buying 263 shares, right? So that equals 263. Pretty simple, right? I mean, you're not going to want to calculate that while this candle's forming. Like you're going to be kind of in shambles there, especially if you have multiple breakouts to take when the market's good. That's why I have this risk calculator. It just tells me right there. I open up my broker, boom, type that in, and I set the stop loss with the buy order also. So I can just click the checkbox. That's why I like Webull. Okay, so that should make sense for entering and then managing your risk. Oh, all right. So if 263 shares, what does that equal? 263 shares at $5 is 5 times 263. So that equals 13.15. So you're putting in, if you have a 10K account, that's about 13% of your account. You should not be swinging more than 30% of your account. So if you get a really good entry and like your stop is really close to your entry and it says put in like, over 30% of your account, that's fine. Buy over 30% of your account. Totally fine. But before the day ends, cut it down to 30. Because if this like ended up gapping down, you'd be losing a lot more than 1% of your account. So it's just not safe. Yeah, but that way you'll have about 10% of your account into this position. And then as the days go, day 3, this goes up like 30%, or let's say from entry it goes up like 18%. So times 1.18, 1,500, excuse me, like $200, risking $100 basically. Pretty good, right? Pretty simple. All right. Now that we got that out of the way, what is next? Stop losses, went over that. Managing risk, position sizing, entry, taking profits. Okay, so for taking profits, now this can be a little bit complex. This is sometimes discretionary. If you see where I have this red line, so I had this red line before this ran into that, and I did take all of my profits right there. So you might be like, what the fuck, why? Great question. Where's day 2? Let's look at day 2. You can see it did end up going above that, but all right. So if you zoom out on the chart and you look back and price was previously above this level, you're going to have areas like this. Can you see all this? Yeah. So this gives me 2 price targets. Price target 1 would be the bottom of this because there's multiple touches here. Price is clearly struggling here. It kind of came down and touched this almost a little bit, bounced back up. And then here, it just really struggled, and you can see it there. I wouldn't really recommend you try to find your price targets like that. I mean, I post pretty much all my trades on Twitter and Discord, obviously, literally everything in there. If you want to, you can, but sometimes it might make you sell a little bit early. So I would say if you can identify a price target easily and you see an area like this, where price is just really struggling there, um, and you see that multiple times. So this one, like price was struggling here quite a few times, and then it struggled here again, bounced off this like quite perfectly. If you see something like that, that's a pretty good indication that, your take profit zone is good. And then you'll see price struggle along your take profit zone. So if we look here on the 5 minute, you see it came up on day 2, went right towards it, then came back down, came up again, went right back down, went up for it again. And then this is where I actually took profits. I was like, fuck, it does not want to go. When it came back down a little bit, I took profits right here. And then what is this? Day 3. Day 3, it came up right to the same level. So I was like, okay, that's solid. But then it ended up pushing through there. I was like, oh, wow, what a surprise. Really didn't expect that. But then it came down. So if you don't have a price target, like if you can't identify a price target like that, what you do is you wait 3 to 5 days in. So typically that's the strongest. You can see here 1, 2, 3, 4, 5. So day 5 would have been pretty shitty. But let's say day 3 or 4, you wait until close, or you wait a few minutes until close, or before close, I mean, and you sell a half or a third of your position. So it depends on how much it's up. If it's up a lot, then just sell a third and you'll be good. But if it's not up like a bunch, like you're not up over like 3 to 1, I guess you could say, just sell half of it right before close. So let's say day 3, you sell half right before close. It's about to close. Market's about to close, and it's at 584. You bought it at like 5. It's up a decent amount. You sell half there. Your stop loss then goes from break even, or goes from low of breakout day to break even. So that way you just took some profits, and now there's literally no way you're gonna lose in this position. And then you're like, okay, where do I sell the rest? So either it's gonna come back and then take out your break even stop, so wherever you bought it at, $5, or it's going to close under the 10 SMA, and that's where you take full profits. So today, it closed under the 10 SMA. Right here, you can see it closed under this purple line, which is the 10 SMA on the daily chart. That's when you sell the entire position. If we go and we take a look at Carvana. Carvana, I had my price target here. If we follow that line, you can see price struggled here, came up, tapped there. And then we go back even further. It had a little trouble during, what is that, COVID? I think so. And then even further back here, it struggled here again. So it was just like a really clear price target for me. Struggled here, bounced along there a bunch of times. Bounced here a bunch of times, came down, bounced, came down, bounced. And then, a couple times there. So I was like, okay, that's a pretty good price target. And it looks like it's already respecting that. So it came up, had good earnings, gapped up to this level, kind of went through there throughout the day, and then just took a turd, came down, did this, whatever, set up again, and then went right back to that level. So I ended up selling that position that day. Let's go back to NN. So Carvana, if you were to wait and use the 3 to 5 day rule, you would have gotten fucked. You would have lost on that position. And then if you waited until it was closed under the 10 to sell the rest, you would have been down below low of day, so you already would have got stopped out. That way, using this price target system, you are able to secure a lot of trades that maybe shouldn't be secured, or you can take profits at a good point. It's good for options too, for sure. But yeah, okay, let's see. What's next? Oh, never risk more than 1%. If you're risking more than 1%, you are pretty stupid. In the beginning, you should risk like a 1/4% or half because you're going to lose more. You're probably going to be taking like some shitty setups. You won't have a full understanding of everything. So don't try to risk a lot of money because you don't even know what you're doing yet. Wait until you know what you're doing and then risk 1%. If you get really good in really good market conditions, you can risk 2%. But do not jump ahead and try to risk more than 1%. Please keep it to like 0.5% if you're first starting out. 1/4% is preferred, but I know some of you guys have a lot smaller accounts. So yeah, I guess that wraps it up for part 2. Part 3 is going to be trading breakouts with options. So I'll show you guys how I pick my strike prices, expiration dates, Price targets, we'll go over that again. And then how I manage my risk with options. So now you guys know how to manage your risk with shares. You know when to take profits, and you know when to sell the whole position. Next one will be with options, because options, you don't get as many setups. You're going to get more setups where you actually have to trade shares rather than options. And I'll also hopefully show you guys when to be trading options versus when to trade shares. It's going to be a little challenging because that's something I look at on my broker. Either way, though, we'll cover expiration dates, strike prices, take profit zones, all that good stuff. But yeah. All right. I will see you guys in part 3.